Hey guys, so Google just decides to mute my broadcast whenever it wants. YouTube, thanks Google. I'm shorting your stock, you jerks. I'm gonna buy put options on it. Can you hear me now, Donna? Can you confirm? It was on mute. It's not my fault. It's all your fault. It's always your fault. You have to live at cause. Uh, Donna, audio now. All right, thank you. All right, guys. So what I was saying this morning is good morning first and foremost. I'm gonna talk about a few things, including the Brexit deal. We'll chop this part out. Good Friday morning. We're going to talk about the Brexit deal. We're going to talk about Congress and a spending bill that was just passed that we're going to avert the shutdown on Friday. We're going to talk about November payrolls and a number of other things in today's broadcast, including Bitcoin. I'm sorry for the audio issues. Here we are. We'll cut the first part out. So in today's update, let's first start out by going around the world once again and checking in on markets. In Asia, Japan's up 1.4%, Hong Kong's rallied 1.2%, China's up 0.6%, and India's up 0.9%. All right, in Europe, London's up 0.4%, Paris is up 0.5 percentage point, and Frankfurt's up 1.2%. So why is this important? Well, because there's a strong rally here in Asia and in Europe. So what do you think is going to happen going into the weekend on the U.S. session at around 11:30? Well, European equities close at 11:30. Some day traders are going to start to take profit. Some swing traders are going to take profit going into a weekend where nobody knows what's going to happen. Every weekend there's an opportunity for something new to come out of the woodwork. So I think there's going to be some selling here around 11 to the 11:30 stretch. Be careful, but that doesn't mean you should fade this momentum on the U.S. Open. I think we can continue to the upside. In fact, would not be shocked if the U.S. market or the S&P 500 in particular hit a new all-time high today. There's a lot of risk-off sentiment. All right, so here's the deal. We had non-farm payrolls at 8:30. At 10 a.m., we have consumer sentiment and wholesale trade. And 1 p.m., we have the Baker Hughes rig count for oil. Let's talk about Brexit. So this morning, we got an announcement that a Brexit deal has been reached in phase 1 of the negotiations. They could now proceed to phase 2. This was widely expected. The pound had rallied a lot in the last couple of days in expectation of this deal being reached. So when this deal was actually announced, it just became buy the rumor, sell the news. It's like, we already knew this. Nothing was new. Let's sell this news and get out. And that's what ended up happening. All right. So that's why the pound, despite a Brexit deal, is getting hit this morning. Institutional traders and equity desks around the world are just saying, you know what, time to lever off this trade. Time to lighten up the trade a little bit and get out of it. So you're seeing some profit taking and some short selling from day traders who are looking to step on it and ride the actual announcement, fading the news. Okay, that's how markets move. Welcome. So I think we just had too many buyers that have to shake the tree branch a little bit and shake out some sell stops below before the pound could really try to make another run at a new high. All right, well, not new all-time high, but new intraday swing high. All right, a bill hits Donald Trump's desk today for government spending to be extended out to December 22nd. So crisis averted for now. Government won't shut down. We have a new deadline, however, of December 22nd. So it's not like there's that much more time. Lawmakers are going to be busy throughout the holiday seasons. Who's going to buy their kids presents? I don't know. That could be a company you could start. Congressmanspresents.com or Congresswoman's Presents. Lawmakers have a busy schedule. Like I said, they're going to seek to resolve some issues, and hopefully they actually pass some kind of a budget. What they have to agree on here is a budget in order for the government to operate in the future, not continue to kick the can down the road with these stopgap measures and temporary increases, temporary suspensions of the spending limit. Spending limit means you're spending too much money. Do something about it. Imagine having that on your credit card. You have a spending limit hit. Okay, well, let's just delay it. Let's just plan to delay it. Let's keep spending. No, it doesn't work like that. You got to do something. You got to run a budget here. Geez. Anywho, it's been extended. That was part of the fear that was built and baked into the market today. That's gone. So again, risk-off sentiment's coming in a little bit more full force in this morning's markets. Let's talk about payrolls because this is big. Okay, November payrolls. This is statistics for November jobs. These are private payrolls that are basically jobs added and or lost. These are the numbers the Federal Reserve looks at when making their decisions for interest rates. You have these numbers too. There's a lot. There's quite a bit. Let's cover it one by one. November's change in non-farm payrolls, first and foremost, the headline number came out at 228,000 jobs versus 195 expected in November. And traders say, well, that's great. Let me just buy the market. That's good news. It's not that simple. It's not that simple at all. All right. If I told you you could win $1 million or you just won $1 million, do you go and celebrate? No, the first thing you say is, well, how? What happened? How do I get it? How to put it in my bank account? You want to put that thing in your pocket before you feel like you got $1 million. Yet when you hear a headline, you get all excited in the market and start buying for no apparent reason. Let's dig a little bit deeper. Change in private payrolls are up 221,000 versus 195. All right, manufacturing jobs are up 31,000 versus 15,000 expected. So this is strong in the manufacturing sector. This is good. Birth death adjustment was minus 5,000. The birth death adjustment is one of the biggest hoaxes in all of this entire number. What this allows the non-farm payrolls to do is to actually manipulate this number, right? You could add a little seasonal adjustment in there and pepper it a little bit and get whatever number you want. Case in point, last month they said there was a minus 5,000 job birth or death adjustment. That means that, hey, if a few employees die, they have to be removed from the workforce somehow. So we have to take into account for the life cycle of people in this jobs number. And well, guess what? The previous month was 221,000 people were added to the economy, just added out of thin air. All right, that's just mind-blowing to me. So when you look at these numbers, always ask yourself, what is actually going on under the hood? I'm going in under the hood with you guys here. All right, so the birth death adjustment was actually a removal of people from the labor force, which is supportive. This is actually bullish because yes, they're not adding any people and we're still getting positive jobs. So far, so good. Let's keep going. Prior change in non-farm payrolls, we're not going to look at the prior numbers. We don't have time. I'll look at it with the trade pros in the room. Non-average hourly earnings. So here's the thing. Another thing traders don't realize, these monthly jobs report, they come in three folds. One is, you got to scratch my nose and try to do it in a smart kind of hidden covert operation way. It didn't work. One is the number of jobs that were added. Number two is how much are they getting paid hourly. Number three is what's the unemployment rate. These three things paint one picture. It's not just one number. All right. Non-average or can't talk. November average hourly earnings month to month, 0.2% versus 0.3% prior. Okay, so that's a weaker number, 2.5% annualized versus 2.7% expected. So we have a lower pay amount on an hourly basis for the employees. Now the real picture starts to emerge a little bit. You have more jobs that pay less. All right, that's all I'm going to say. How do you think the satisfaction rate of those workers would track if there was one? I don't think they'd be as happy. Everything's gone up in this market except wages. All right, costs have gone up, markets have gone up, everything has gone up. Transportation costs, food costs, energy costs, everything's increased except your wage, more than likely. All right, so prior hourly earnings were revised lower. So last month's report was revised lower. All right, year over year numbers were revised lower as well. Last month's manufacturing jobs were revised lower. Last month's private payrolls revised lower. So we have straight downward revisions. So this is not looking like the best report ever. The headline number looks real good. All right, but when you start to pick it apart a little bit, it starts to fall apart. When you peel some of the onion layers back, it starts to look a little bit weaker. Now let's look at the unemployment rate, 4.1% versus 4.1% as expected. This is the lowest unemployment level since December of 2000. All right, think about that. It's the lowest unemployment level since December of 2000. However, the underemployment rate has gone up. Okay, what does underemployment mean? It means people who are not able to be employed, who've given up, discouraged workers. This is not a good number to see. It's gone up 0.1 of a percentage point. Change in household employment is also up. Civilian labor force participation, the amount of people that are in the working force, is actually kind of right at where it's supposed to be, 62.7 versus 62.7 prior. So no new people have really entered or exited in terms of month over month. Number of unemployed people is 6.61 million versus 6.5 prior. That's actually positive. All right, and we have a labor force currently of 160 million people in the United States, 169.5. So overall, what I'm trying to say is this isn't a terrible jobs report, but it's not great. It's not great by any stretch of the imagination. And I'm trying to give you guys today's morning market update. My number one goal was how to read a non-farm employment report the full way. not just a headline number, but dig deep into it. All right, what does this mean for the Federal Reserve? Wednesday, November 13th, we're more than likely, Wednesday, December 13th, we're more than likely going to get an increase in interest rates. There is 90.2% chance of a quarter point hike, and there is a 9.8% chance of a half point hike, and there is a zero goose egg chance of no hike currently implied in the futures market based on these numbers. So there you go. We're probably going to get a hike in December 13th. That's already known. More importantly, how do we transition to Jay Powell? And what's the future look like? That's what traders are starting to look at right now. That meeting is December 13th. All right. That's all I had for you today. I want to wish you guys an awesome weekend. I had a comment earlier on through email. Somebody said, this shirt here, I said this, but the mic was muted before, so I got to say it again. They're saying, don't hide that beautiful shirt under the sweater. I think they're making fun of me, but I'm going to go with it. I'm going to say this is becoming YouTube's darling, this shirt right here. It's just like a salmon-colored shirt. It's funny, when I brought it home, the fiance is like, oh, man, she's like, we need to get you a stylist. Don't ever wear that when you're doing a YouTube video. Here I am. All right, guys, have yourselves a good weekend. We've had a pretty long trading week. We're going to end it off Friday with a bang. I've had a great week myself. A lot of members in the trading room have had a great week. I wish you guys all the best. I encourage you to sign up and join our trading room. We trade every morning together from 9 to 11 a.m. and it's a community. It's not just me talking on the mic. There's two-way dialogue. There's people sharing their experiences. There's people that could help you become a better trader, and there's people you could help become a better trader, and that's the value of community-driven learning. All right, you're there for each other. And then you guys know that statistically you learn more by helping somebody than you do by being helped. That's it. That's all I got for you today. Check out TRADEPRO Academy. Comes with money back guarantee for the first 2 weeks, but you're not going to need it. You're going to absolutely love what we do. This is hands down the best trading education on the internet. Take care, guys. All the best. Like, comment, share, subscribe. I'd love to get your support on this. We're trying to hit 2,000 subscribers so we can continue to do this. You guys take care. Have a good weekend. I'll see you on Monday morning. Got 2 YouTube updates coming out this weekend, 1 tomorrow, and then 1 on Sunday. They're a surprise what they're going to be. It'll be around 1 to 1:30 p.m. each day. Take care, guys. All the best. Patented chair spin in 3, 2, 1. And have a good day. Have a good Friday. All right, trade pros, let's do this. I'm sorry, the mic kind of was muted, and so spent a little bit